Good morning, everyone, and welcome to the European crossover webinar. And let me double check something, make sure we're all online. Welcome to the European crossover webinar. Obviously, the story of the day is going to be with this cable, or actually with all the sterling pairs have actually pushed and stretched. The cable still holding at its highs, but still pushing a bit higher. But if we take a look here with the guppy, it had actually, bear with me. If you saw the end of the day analysis, I had noted we had actually already hit the 78% here on the cable and not the cable, but on this guppy. And we know that with the sterling pairs, especially cable, that 78%, whether it's to the upside, to the downside, is quite the attraction. So you can see right here, pressing up against, but we do have a major level coming in right there at 34.78. You can see that. But boy, what a turnaround we saw here with this guppy. I mean, what an absolute scream. You know, we had the bias chart resistance support, and boy, did we take off like a scalded dog. And we're holding up here, but as I think it's has a lot also to do with the end of the week. I mean, people are pressed up against some positions, and some people may have to forced to go in and cover. The market's aware of that, so it's going to keep that pressure there. Bear with me a moment. And you can see here with the sterling on here, pressing up right against that 84. We made it right here. That's a very key level here with 84. We paired back just a bit here, just a bit. They weren't able to close above it, not even on a 2-hour close above this 84 even, but we kind of eased back from this area here. Also taking a look here at the Aussie yen. Not with any great strength, but we are continuing to press a little bit higher. Obviously, a lot of it has to do with these U.S.-China talks, and I think Trump's under a lot of pressure, and I think they're now considering even a partial victory to be a victory. So I think that he's the one that really needs it, and they may, one way or another, I'm sure he's going to announce it's the greatest deal in the world, even if they only agree to, what the trade restrictions would be on a piece of gum. We probably consider it the greatest, most fantastic deal ever passed. So I think anything is going to be, he's going to grab for any kind of a agreement, to be quite honest with you. And devil be the details. That's not going to make any difference. So you can almost expect that they're going to try it now, unless it's a complete failure. He's desperate to find something. I mean, I'm just telling you the realities of it. It's not a matter of taking a political stance. So you can essentially think that, they're going to announce some type of a victory, one way or the other. We'll see what the market does with it. Let's go and move on to some other markets. Sorry about that. Crude has continued to move higher, and this is a level that we were looking at from yesterday, 54.33. This is actually confluences with a level that we had, or actually a zone between on the 30-minute between 54 and 54.33 on the 30-minute. Actually, in Asia, early Asia, we'd actually made it to 54, and then we kind of started easing back a bit. One of the things we talked about over the last few days, I'd mentioned, I thought the market was sold out. And I thought this 51.98 was going to be a great area with a risk to about $1, maybe. But the moves have been very, they've moved higher, but isn't considering how far we've fallen. It hasn't been like it screamed higher. This, I think, also has more to do with where we are as far as risk on. And I think that right now with that, it's just a matter of the market's pushing up a little bit higher, a little bit higher, a little bit higher. So we are above this, but once again, once we'll see what happens, I think we could see some gains probably giving back a bit. Not that it's rallied that much, but the point is it's been really tough trying to move higher. You can see here after this fall, you thought, okay, they're probably going to take off. So, we get this little mini hammer. Okay, this is probably just a little bit of a fake out to kind of dip, and they're going to test, and then they're really going to take off. We come down here, we take out these lows. Now they're really going to take off. Oh, wait a minute. Now it comes back in here. Okay, now really fixing people. Now we're just going to take off like a jet, and it's just been a little bit higher, a little bit higher. It's just, like I said, once we get past all this Asian talk, we may see a little bit further rally, and then maybe have this market come back under pressure again. Bear with me. All these are all over the place because, as I mentioned, I was doing the analysis on the basic technical for end of day, so have a lot of these charts all set up with different markets. But anyway, get onto here. There we go. And look at the gold market. We did get that dip yesterday. Same thing here with doing the 10-year note, which I don't like to look at the futures. I just rather just look at the rates. So I'll have to do this later. That's what I'm saying. Get everything else switched around. But we did go on and come up, and we actually went beyond. And let me see if I can get this. I have to get the correct one there because you can see all my analysis for there's missing that. But anyway, we had seen the market come back with quite the snapback. Actually, I posted some, I posted some charts, but like I said, missing some of this. I had to find out the right market I want to use on this. But anyway, we saw the market come back and actually do more than the most recent 50% back on this at 166, and we saw the gold come under pressure. And at that point, I thought, okay, you might see a little bit more of a dip. I talked about picking up a value on a dip, a value long, but we've seen the market come back a bit here with gold. So we've kind of already had our bit of a dip here, and I think that we may be able to go and push up a little bit higher here with the gold market. We did get that dip, but like I said, you can see here a little bit of I wouldn't call it an oversold rally, but certainly, like I said, there's an opportunity that we could have even dipped a little bit lower, but market's a little bit overdone. I think probably because of same thing with the risk. What if the talks don't go well or whatever? We could see gold snap back. So I guess there's a hesitancy to go further, to not go much lower than we had already come off. Market really sustained pretty good little pullback yesterday. If you look at this, excuse me. Let's just go into the news real quick. It says the Aussie dollar and the Chinese yuan, often seen as barometers of investor risk appetite, rose on Friday on hopes of progress in U.S. trade talks, while optimistic comments from Ireland on Brexit boosted the British pound. The top U.S. and Chinese negotiators wrapped up the first day of trade talks on Thursday with U.S. President Trump welcoming what he called a very, very good renegotiation. Which, you see, that's what I'm saying. If they agree to an exchange on a piece of gum, it would already be the greatest negotiation the world has ever seen. Of biblical proportions, and lately he's been making these comments of quote-unquote biblical proportions. So once again, like I said, take it with a grain of salt. But anyway, business groups expressed optimism the two sides might be able to de-escalate the trade war, which has sapped economic growth around the globe. Investors are ready to celebrate any form of a U.S. trade deal, even a limited one. So you can see what the market is looking at. Even the expectations are very, very low. The bar is very low. Like I said, if both sides say they agreed on anything, the market's going to say, oh, that's a great deal, even though it may, even though the details may come out in the wash. A week later, a few weeks later, and find out it's not all that great. Well, the market will deal with it then. They just want to hear it's all good, and then they can celebrate. The euro was up slightly at 110.02, and Actually 1018, apologize. And we know the importance of that 1020, not far from the 3-week high. It reached on Thursday against the dollar, which usually appreciates as a safe haven currency when trade relations worsen. Sterling was up marginally at 24.55, just under a 2-week high, after rising 2% overnight, its largest daily percentage gain in 7 months. Leader Varadkar said on Thursday a Brexit deal could be clinched by the end of October to allow the UK to leave the European Union after what he called a very positive meeting. Oh my God. Sounds like Trump. Marshall Gittler, chief strategist with ACLS Global, said it found hard to change its pessimistic view on the pound, especially since we don't know what the two sides actually discussed. I'm also worried that anything that's acceptable to Ireland might prove unacceptable to the rest of the UK Parliament, and enough MPs might be willing to choose the national suicide rather than accept the unacceptable. I will therefore retain my negative bias for now, but recommend watching the situation closely. We'll just touch on this. When the U.S.-China currency deal won't change dollar-won, a U.S.-China trade currency agreement being floated as a symbol of progress in this week's trade talks between the economies would largely repeat past pledges by China. Such a deal, however, would provide the U.S. Treasury an opportunity to climb down from what currency experts say is a misguided declaration in August that Beijing was a currency manipulator. Little is known about the structure of a currency deal that U.S. Chamber of Commerce said American and Chinese negotiators were working towards on Thursday. You're not going to resolve something like that in just a couple of days. That's just all smoke and mirrors. I'm just trying to tell you like it is. At the time, China was widely seen as deliberately holding down the value of its heavily managed currency. Its essence, I don't see anything in the currency deal that will cause significant change in present RMB currency dollar dynamics. Let's see, it would be likely accompanied by the U.S. canceling a planned tariff increase of 30 to 25%, from 25%. A U.S. official confirmed the currency would be likely discussed in the talks. I mean, like I said, just hitting the highlights because it's not really going to happen. Nothing like this is going to be resolved in a couple of days. It's just silly to think that it would be. So let's just go on and move on to the analysis, okay? Bear with me. So coming in today, as far as reports, we did see German CPI, actually not German, I apologize, Spanish CPI and German CPI a little bit earlier, actually. And we don't have anything until we come into the States with at 8:30 Eastern import-export prices. We do have, this be important, Canadian employment report, as well as University of Michigan. And let's see, they're looking for Reuters poll of 92 on University of Michigan, preliminary employment, looking for 10,000 out of Canadian employment, flat on import prices. CPI came in flat. I'm showing here German CPI and well, actually that was the Reuters poll. The numbers came in flat though, and on Spanish CPI also came in flat, and that's what the poll we're looking on both those. We'll move those out of the way. Sorry about that. There's no changes here with the euro. As I mentioned, it's all about 1020. One of the things we're looking at was the boon. The boon did fall a little bit further. It is coming off of those lows, but this is all about this 120. And it's going to be interesting. And I mean 1020, that is. One of the things I thought that may have potentially be working for the euro is, once again, we're at the end of the week and you might be causing a potential squeeze in some positions. The Bund is lower. It's still under pressure, but it has come off the lows. We're about 50 ticks off the lows, about 50 ticks off the low, which seems up a lot, but considering that we've fallen already from a few days ago, we fell 175 ticks. So, but I will say this, I'm a bit surprised that the euro has not been able to push even higher at this point. So, very, very interesting. I would have thought that, like I said, the bunds are remaining under pressure, but they're off of those lows. Obviously, the key level here is 1020. We are beyond this trend line, but then again, this trend line, like each day, it's going to move lower because of the slope. The key is going to be this 1020. And as I said, if we can get a daily close above 1020, it would serve the two purposes. Not only would we be above horizontal resistance, but like I said, we'd end up also taking out this trend line. But like I said, closing here is basically like an empty victory, because the only reason we will evoke in the trend line if we close right where we're at, let's say 10, 11 or 10, 12, is because the downtrend, because the slope of this thing. So the key is we need to close above 1020. We're basically right there. So will we be able to squeeze some people? We shall see. As I said, the bunds are coming off their lows, but still lower than they were just a couple of days ago. So it's still about 1020. Upside squeeze here, 1075. And on the downside, we will go in and lower this to 984. Excuse me. Let's go move into cable. So we got above yesterday's bias chart support, resistance, I should say. You can see right here it was 23.52. We got past that. We're looking at an area on the 2-hour chart. Let's move into that. A 2402 to 2425. You can see right here. The one thing that the cable has going for it, bear with me. The one thing that the market has going for it as far as the momentum is, because as we go on towards the end of the week, and we've had a pretty good dramatic move, anybody that's short that doesn't have the deep pockets, and we've seen this happen before, ultimately gets run out of Dodge, or gets their stops knocked. One of the things that we do look here is that we spent a lot of time down here, so I can see where people would step in and want to take shorts. I think I wouldn't have wanted to take any shorts here unless we got up to about here at the time, which is about 23.55, because we were just so close. Now this 24 to 2402, that was a nice little zone. We're still keeping up the pressure, and we're not that far away. We've seen so many times with the cable, we can see this thing turn around and give up the gains. Although, like I said, they're hoping that they may be able to get something worked out. The only thing that's working up against is the time, and I think Nidish in the chat room made a pretty good comment about the options are getting very expensive on the, obviously, because we've been on the downside, the option is a little bit more expensive. The risk here on the potential upside, and so it's driving this price a little bit higher. We shall go and see, but my take is I think it's more about the end of the week and pressing people that may be short that said, wow, look, and some people have done exceptionally well, like Amanda, who just keeps on selling every rally, and then we see the market come back down. Keeps on selling a rally, we come back down. Keeps on selling a rally, we come back down. So there might be people that are frustrated saying, well, God, I want some of that easy money too. So they're going to step in. But here's the deal, folks, as you get closer towards the end, the risk increases greater. So you can see how well we're sitting here holding this area here. So you have to allow for this thing to really move. So I think that the key area, if you were trying to come in, was between this 24.2 and 24.25. Now we're above that, not a whole lot higher, but we are. Now, 125 is a 78%, and it's also confluence with this is 2518. But like I said, when you're dealing with the fundamental event, all you can do is look at the risk levels as far as technicals to say, okay, how much am I willing to risk? Where do I think that we can stop? So what we'll do is we're going to put it at 2518. Because we actually have a level that, although we have the 78%, we know how cable likes to move. One of the things is when you look at the other pairs, you can see here that the guppy, it hit the 78% yesterday, and it kind of backed away a little bit, but it's pressing against the 78%. We're seeing the sturdy nod kind of back down a little bit. So how much more further pressure can we get out of here? We shall see, but we're going to go and put this at 2518. So just thought that explain where we're coming up with that. On the downside, to see some volume coming in right there. You see there? Right now it's going to be, we have to move it just a bit lower here, right there. 2351, 2351. Let's move this down here. If we were to see the market pull back, you'd probably see some pretty good little short coming right there, coming in. 2351. Doesn't mean that that's the outright low. Just saying that for today, any pullbacks, you'd probably see some people stepping in. Anybody with short up in here or here, would probably be happy to go and take those shorts off at 2351. Let's go on and move into the Aussie dollar. Well, we are seeing the Aussie dollar with a little bit of a bid, as I mentioned, all about the U.S.-China trade headlines. No changes here in the sense that 6809 is kind of similar, as I mentioned before, the last couple of days, with the euro at 1020. If we can get above this horizontal resistance, which is 6809, serves two purposes. Not only break above this horizontal resistance, which is important, we also break this down-sloping trend line. It's interesting because you probably would have expected a lot more from the Aussie dollar in light of the U.S.-China trade talks. So it seems like other markets have more of a risk on or looking more favorably. And I guess to me, if you look at it, the Aussie dollar is probably telling you more about what I believe is the real story. Like, it's like, oh, okay, maybe there'll be a little bit of a positive headline. We'll see. But the Aussie's playing it more as a doubting Thomas for good reason. Although I think, like I said, at this time now, the market's even accepting that it'll even try and find victory in a partial victory, and it might be very, very, very partial. Partial in the sense that just barely even anything they can agree on. The market's going to say, yeah, hip, hip, hooray, we have a deal, which is pretty silly. But I think, like I said, you're seeing here with the Aussie, not really giving much. I think the Aussie, you're really not going to see a gain unless they really see something of great significance. And I don't see how you're going to see anything in great significance over 2 days. I'm just saying, but both sides, and one side is far more desperate than the other one to find any kind of a success whatsoever. And that's just the realities of it. That's what I'm saying. It's not a matter of looking at it from a political standpoint. The thing is Trump's in a lot of trouble. He'd reach for anything like they said, a drowning man will reach for a blade of grass if you throw it out to him. So the thing is here is, he's going to declare victory for even the slightest thing just to get his own woes off of the front burner. So that's what I'm saying. I think the Aussie here is giving you more of what's realistic, although other markets are looking and pushing this market out. Like a good example, here's the S&P's at 29.56, but the market's accepting for what it is because, like I said, they're looking at even a partial victory is going to be declared a victory. So it's all about the 69.08. Now, if we do get the old, we have a victory, how much further can we push? What if we get that victory declared over the weekend? It's actually going to come in right there at 68.82. So let's go on and mark this here. That's important on the close. But it's 82, what they may initially stretch out. I mean, if they declare victory, I don't think that the Aussie would go bananas, but you can see that that would be an area. I mean, if we could push up much further, then it'll be 82 for the key reactionary point. We could, if it was over the weekend, they could maybe open up here towards 69 and then start to slide back and pare back. But the real key would be that 68.82. On the support, we're just going to move this up a bit here. 67.23. Let's go move into the Kiwi. The Kiwi is even more restrained. Look at that. It's just barely nudging higher, but we will say this. It closed at its best levels of the week yesterday, and we're even adding a little bit further here. No change in what we've had as far as the bias chart resistance. You can see here 63.60. Look at that. If they announce something big, it's going to be 64.36. I mean, for a little bit of a stretch. So we're going to do that here. Once again, if they announce it, at least you know where you'll have some figures to come in from over the weekend. You know what I mean? Well, God, they announced it. We're opening up 75 pips ahead above that resistance. Where's the resistance at? Well, this will give you like a little bit of a barometer. The real key still remains the same, 63, 63.60 right here. And we can actually mark this off on a close. But the stretch to put things into perspective would be right here, 64.36. So if the market were to open up a little bit higher here and we start to slide, you can know that the significance of the 64.36. We'll see what happens. Moving on to the dollar CAD. We talked about this yesterday, and we said, hey, look, we have not been able to get above this 33.36. We kind of went into a little bit of detail how this market made so many stabs. It looked like it was going to really break. Even you looked the way that the candles were going. We saw that dramatic turnaround, and then we just had not been able to fill the bill. So I said yesterday, gun to head, you could just get short on this thing with a stop above 33.36 or put your stop above that for the daily close. And sure enough, we did fall. We actually had moved down to 133. We rallied up to 133. Well, not rallied, but we came up to 133.20 after hitting 33. Then we turned around and went lower. We talked about the support being at 32.88. The market kind of initially held. We dipped. The support on the downside is 32.56 on an intraday basis. We do have Canadian employment today. So let's go on and give some room down here. And we're going to say it's going to be 32.36 on the downside. Sorry about that. There we go. So it's going to be back to the old 33.07, but we know 33.36 is key on a daily close. So we'll see what happens. We have this wide disparity right now because we do have the employment report this morning. Obviously, you have to factor in that potential volatility. Let's go on and move in now to the peso. Well, we're breaking here. This is not good news at all. As I said, I did the basic technical for end of the day, and this is not good. This is not good. Us losing 1944. That really, and I said, if we lose that, it opens the door for us to challenge back to 1932 and potentially to break that, especially if the dollar comes under a little bit of pressure. Um, Not good at all. Not good. Um, um, we're going to have to go with this dip, and that's a little bit of ways. But the key thing, and I was saying, if we don't hold that 44, it has the potential to challenge 1932. And we're at the end of the week. We had, it took a while. I kept the bullish bet on this because of defending this 1923.6. That held up well. I mean, it played out well because we defended this 1932. We saw a very nice rally off of that. Okay. But on the pullback, and we did expect the pullback. Remember, we're looking around that 1985, 1986. We did see a pullback. I was expecting the pullback to be contained about 1960, and then we could move higher. And we dipped below that. Okay, fine, a little bit oversold. We rallied back. We really needed to move higher. We started to lose it again. The potential is we could maybe see this market get a little bit spooked, and long as you're saying, I got to throw in the towel. So it's going to be 1932 with the potential that this could even break even lower. So 1932, those old lows. And essentially doesn't mean to buy it there. It just means that those who would play it short will look to go in and cover some. But like I said, we can risk losing a lot on this thing. I'm saying as far when I say a lot, I'm talking about as far as the technicals, break that 32 and come down here to challenge this 23.6. It does not look good at all. Upside resistance is going to be actually now at this point a 54. We'll keep the bullish bent, but if we lose at 32, that's going to turn into bearish, and we can easily lose this bias by end of day. Let's go move into the dollar yen. We talked about this potentially yesterday, getting to 808, and so we had this here. It's kept a nice positive vibe, but even then, despite what the market is buying into as far as positive China developments, all you have to do is just look at the S&P chart. They're pressing up right now against 2960 on the SP, SP cash. It's the rally, even though I thought we would make it up to 808, we've made it up to I think 802. Actually, it looks like we've rallied a little bit more. We made it up to 813. So we had the 808. I think we'd only got up to 802 earlier. Yeah, yesterday's session. It's still the rally still is rather restrained if you think about it. Okay, so what we're looking for, I think in the Asia analysis, I mentioned a stretch up here around 840. We'll look up here right there. You see that? I don't see. I have a hard time believing that 872. We're just going to go right here with this 843, a little bit of on a stretch. And my thoughts is that ardent bears will see that as a value short. That's what I'm saying. I think he'll have a tough time because they'll say, you know what? I think overall we'll be eventually moving lower. I'll gladly take that. And they probably will end up getting paid off, probably quite well. If you, as Blake likes to say, if you close your eyes and open them up a month from now, maybe even less than that, we might be right back down here. So I'm going to go with 843 on the upside. And then the downside, for now, let's go and move into the 2-hour chart. is going to be 765. 765. Actually, a little bit lower. Right there. 758. And let's move into the dollar index. Well, I think there's still the potential for this market to slide. And we're going to go and have our support come in right there at 98.30. With resistance here at 99.08 right there. And let's go move into the cross rates. Only seen this Kiwi yen break higher. And this is a key level right here, the 68.39. If we can close above that, boy, that really opens up the doors. Key resistance right now, though, going forward here is going to be 68.71. We are getting above the 68.39 right now. So it's going to be right there. 68.72, 68.72. See if we can turn things around here on this. And let's take a look here on the 2-hour chart. Right there, 68.15. Needs to start to turn around for that. Let's go move into the euro yen. We pushed up beyond this 1880 and just pushed it up just a bit higher, not a real significance yet. It's going to be interesting to see how the euro plays itself out, especially the euro versus the dollar. We could see a further squeeze, so we're going to put the resistance level here at 1939. 1939. Right there, 1939. See if we can get up there for the close of the week. With support being right there, 1863. Actually, move this a little bit lower here. right there. 1849, another 40 pips lower. Boy, have we seen this come in right here. And the Aussie dollar itself in itself is still pushing a little bit hard. But boy, have we lost some momentum here with the Euro Aussie. Has it broken lower? Obviously, potential China trade news is offered, and the Euro has had its own difficulties. We're going to look there for support. 61.61. And on the upside, right there, 16 miles. That might even be a stretch right there, but right there, 62.89. Let's move on to the Euro Kiwi. It's interesting to see that we're continuing to see this pressure here with the euro. I mean, obviously, the US China talks are having their own impact. The bunds are coming off their highs right now, but the euro, like I said, I would expect with the end of the week, we would see a little bit better performance here. Bear one moment. And the potential for them to take out these lows here, right here. 73.12. With the resistance here, 74. That might even be right. Let's stretch here right now with the problems of the Euros having. So it's going to be right there at 74.65. Things would have to dramatically turn around for that. Obviously, a lot of moving parts with this U.S.-China trade talks and rumors, and we'll see how those things play out. Let's go move into the Aussie yen. Right there, 73.73 here on the Aussie yen. Obviously, get good news over the weekend. That would have its own impact. I'm hesitant to offer too much on this. Certainly would have its own impact, but we'll be right there, 74.48. Once again, like I said, to factor in, if we do get good news over the weekend and we open up higher just so we'd have a perspective. As far as support, right there, 72.66. Well, we were talking about the guppy. Look at this. Wow, boy, we seeing some. Oh, here's the cable slide now. Cable slide now down to 24.12 now. Um, yeah, we're seeing that with the guppy. Look at that, boy, and cable all over the place. Wow, cable did make it up to 25. I just missed that there. We made up to 25 to 78%. Let's go and switch into that. You can see here, we just made up to the 78% here. Right there. And now here we are. We've quickly come off quite a bit. And remember, we talked about that 2402. We almost made it to 2402. Now we've rallied back, so we're really just seeing this jump all over the place. One moment. EM Tusk told Johnson that there is no such proposal by today. It will announce there is no more chance for a deal at the summit. So EU's test told PM Johnson that if there's no such proposal by today, it will announce that there is no chance for a deal at the summit. Even the slightest chance must be used. Let's swing back. Now we're back to 2462. Let's go on and finish up with this. So it's going to be 135 on the guppy. On the downside, right there, 33.50. And we'll finish up with starting odd now. So a quick jump up in here, but we did not take out those highs, which is rather interesting. So on the upside, we're going to say it's going to be 84. On the downside, right there. We almost got there, 82.67. And that's all we have for today here. Good luck with the rest of the day trading. Like I said, obviously the market is ripe for rumors with this Brexit. But good luck with the rest of your day trading. And thanks for joining us here on the European Crossover webinar.